Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's another amazing week, absolutely packed with important macro headlines and crypto news to get through. We passed 90,000 subscribers this week, which it's just nuts to even think about. I mean, one of my goals when I first started the channel as a dream was to get to 100,000, and it wasn't because of the number. It was more if we got there and I could keep doing what I'm doing without doing, clickbait titles and top 10 coins that can go to the moon every second week and those sort of things. If I stuck true to the way that I do my education and structure my videos, then that would mean that there's a lot of people that I believe are getting well-rounded, unbiased education, and that's what's most important to me. So look, I hope we can get to that 100 before the end of the year, but for those of you that are Aussies, you will get the joke here of the nervous 90s. I did do that live stream last night with a bit of a macro view about gold, silver, Bitcoin, crypto, and DeFi, about the potential upside, the risk to rewards, and how that's changed a little bit in the way I'm structuring things. So check that out when you do get a chance. And as always, I know these videos can be long and they're all time stamped. You can watch them in time and a half speed. I know a lot of you do enjoy that. But yeah, here's to the rest of the year. I think we can finish off really strongly. Things have changed a little bit, which we're going to dive into in tonight's episode. But yeah, I guess thank you to everyone that's joined us, particularly the few hundred new subscribers again this week and 170 members in our premium group. And hopefully we crack that 3,000 number very soon, and a couple of special stories to share from within the group. But also, I guess, thanks to everyone that just sent me well wishes in the comments and that as well across social media, the group and whatever. So yeah, last Monday was a really hard day. My dad and his dad that passed away were really tight. Very lucky to get all four generations of us together for a couple of years. And I do want to share a little story and something I shared at his funeral at the very end of the video for those of you that stick around. So to start off with, I just want to mention that whether it's gold and silver or crypto, we're definitely starting to see some more mainstream coverage. And I was lucky enough to be on Chris Judd's podcast, who's a well-known legendary footy player. And these are the sort of things where we are getting out in that the mainstream narrative under people's noses, and it's starting to grow. I think you'd all agree that the momentum, you can just sort of feel it building now over that $10,000 Bitcoin mark or $2,000 gold. It was always going to happen, but it's amazing that we're, I guess, kind of there now and a bit surreal in the middle of it all. What I do just want to mention here quickly as well, a big welcome to Nick, who joins the team. More DeFi gems reaching that 100x milestone, and synthetics now up 150x, which is crazy. We're going to share another one of our members that picked us up 100x. And yeah, we want to be really transparent with our business report. So they're always on LinkedIn. You can read those. We have really put a pause on all, I guess, partnerships and all of our other focuses until we get the Nuggets News app out. So we've got 100 people onboarded to that. We'll be onboarding all 3,000 members. Then we'll open it up to the public. Hopefully that's no more than a few weeks away. I know it feels like forever, guys, but plenty of you are excited to join that aren't Facebook users. So yeah, well done to Cameron. He is the person I just mentioned, the member who lost his job. He's doing the research and he's got a big return with a 70x investment, I should say. And I'm going to talk about that a little bit more in the crypto section. But that's really what the group is for, to teach people that education of how to value cryptos, how to avoid the scams, risk to reward, and to see someone that's, lost their job being able to spend some time doing crypto and get $1,000 into $70,000 in 4 weeks is unbelievable. So well done, Cameron. The more people we have in our group that are doing their own research and contributing, the more winners we're going to find. And that's really what starting that community was all about. Alrighty, so let's get into the local news, where slow wage growth in Australia has been that problem for over a decade now. We can see it topped in 2008, 4% wage growth. Everyone was happy, and it's accelerated again to the downside, unfortunately, this year. And even the public sector wages are now shrinking, which is a worry because so many people are being supported by government. So this is the chart which I guess should worry you, or all governments around the world. who are talking about cutting back on all these benefits. When you look at how much of the wages are coming from them, and this is the percentage of contributions into Commonwealth, which is the largest bank in Australia, and the change. So basically all that positive change is the result of government benefits. When we have a look at what people actually paid for with these handouts, it's things like bills, which is a bit of a worry, paying down debt. So if the government stopped that, we can translate that to people that are going to be unable to meet and pay for their bills. And we can see this coming through in different sorts of data. As we see with UBS here, the correlation between job seeker and the real unemployment rate. And we know that that's probably going to pick up and get to over 10% in terms of the actual numbers. And that's been confirmed by the RBA Governor, Philip Lowe. So he's been really realistic in terms of these figures, that he's saying that 7% unemployment in a few years' time. That sounds really bad, but that would actually be the best recovery of any modern recession. So when you put it like that, when people are talking about getting unemployment down to 4%, 3%, and the central bank governor, who normally says everything is going to be great, it'll get better next year, he's saying unemployment's still going to be 7% in a few years, and that would still be the best recovery ever in modern times. That should really tell you about where we are at the moment. So people continue to dip into their super. $30 billion has been paid out to households. I think the figure is something like 10% of people have now cleaned out their entire super. So they obviously only had 20 grand or less in there to begin with. And the RBA is saying that interest rates are going to be low for at least 3 years. They hope it won't be 5. But remember when they promised us that interest rates would only be 0 temporarily? And so far they've basically been there for 12 years now. Property developers are ploughing ahead with new projects despite all these fears around coronavirus and the age-old debate about supply and demand. Look, I read a really good article during the week about the number of people that move here to study or immigrate, and that is dropping significantly, 6 figures in terms of that difference. And if those people aren't there, obviously that's extra houses or units on market. And when you have the big banks who are always bullish on property coming out and saying they expect house prices to drop at least another 10%, that shows you where their head's at, I think. And this is very different to all other recessions and GFCs, that we've got these big talking heads that are normally the guys telling you that everything's okay. When they're telling you things are bad, I think that can mean that things are going to be really bad. But look, I hope we do get through it. But it's honestly a bit of a worry that they are being so blunt. NAB, another one of the big 4 Australian banks for those of you that are overseas, they're telling these clients that are high risk, that have got investment properties, leveraged up. That was the thing to do in Australia. They're telling their clients to sell while you still can and get a decent price. These are headlines that I can't believe that I'm reading compared to a year ago. Oh, it's always a good time to buy the dip. You got to get on the property ladder. And that's almost the message the government is still sending, really, in terms of even the bonuses that they're trying to hand out. So when we have a look at the actual percentage of wage subsidies in dark blue there, Australia is the biggest in terms of its focus of where the funds are going, compared to somewhere like South Korea or in the EU, where a lot of the funds are going towards this recovery phase. And I think that just tells you, as the tweet sort of suggests here, that I don't think Australia have got a real recovery plan. I say this every week, that the focus tends to be on property. The focus is not really about how can we get some of the highest paying industries, the best jobs, the smartest people into the country. Again, let me know what you think in the comments below. Now, New Zealand had a bit of a scare during the week. They've had a dozen or so cases after being, they say, COVID-free for 100 days. It really makes me wonder if it has been in the community, just being spread, and we've got a lot of people that are asymptomatic. Rumors that it's been imported on, even frozen goods. So once again, I'll leave my personal opinion out and wait to see what the evidence finds. The next thing that I just want to mention here is all about the US, that $600 that Trump has been in the battle with Congress to pass through. But it's very clear the difference here between the top earners, and they've all but recovered, versus those bottom earners that are still really, really hurting. And remember, you're only on $14 an hour in the US, and you're now 20% below what you were before. So look, a little bit better than being on 32% less, but still, this is so clear that what the Fed is doing, not going to the bottom end, it's sort of going to the top end of town who already own the shares. I sit here and I sort of say this every week. In terms of that China-US relationship, this is getting more important as we get closer to the election. But these are the Chinese retail sales here, and they've bounced back a little bit, but not to pre-COVID levels. So when we have a look at the stock market, or this is the global 500, Fortune 500 companies, and for the first time ever, we've now got more Chinese companies in that 500 than US companies. So it's that power struggle to be number one, and this is why they're slapping tariffs on each other and banning tech, and we'll get into all that in just a second. But this is also the big one. Remember, it always comes back to the oil and the Middle East. I did that video outlining how America got their way to supremacy, being number one in terms of the barrels of oil they produce, because they overinvested in something that was uneconomic, and that was fracking. And now that's really pulled back, and China has ramped up, and they're building relationships. They're selling, trading gold or yuan. They're not doing it in US dollars. And once again, trying to have more influence in the Middle East, and that is not going to please America. Now, Trump's obviously come out and spoken about shutting down, TikTok and banning WeChat, but again, it's American companies and citizens that are ultimately paying the price for all of this. Is he going to cut them out of the world's largest market? They're just going to use another app. That's the way these things always happen. Cover one hole, cut off one head, 3 more heads grow. Now, an open letter to Dr. Fauci in America, a lot of doctors getting more confidence as more evidence come out behind hydroxychloroquine, particularly that treatment with zinc. And there's some people out there saying that even just zinc alone is so good. That's the argument, the age-old argument, that zinc and these other more natural supplements can have, inherent antiviral activity. But they're just thinking that we could be doing a lot more, and that it's probably safe to start at least letting young, healthy people out to work. These are the kind of steps that doctors are wanting to see. But I also understand the other sides of the argument, where we're hearing Australian doctors in particular talking about the secondary effects on the immune system and things that we don't quite know how it's going to play out if COVID is worse the second time. So it's a real fine balancing act, but I definitely feel that some of these doctors are wanting to have an honest discussion. And like everything, whether it's banking, politics, and now it seems like we just can't have an open discussion about it. Geez, hasn't this been topical in terms of good, bad, yes, no, Trump's taking it, Trump doesn't recommend it anymore. It's nuts that this is the conversation that we're having. Of all the vaccines out there, who would have thought that Russia was the first one to say, hey, we've got one, we're mass manufacturing now. There's 160 out there that already there's a race to get these out. But I just think there's people are trying to plant that seed that, do we trust it? It's Russian. So I know some of you hate even talking about vaccines, but look, this is going to be something that is all over the headlines, particularly once it's out there. Are they going to force people to have it? We already know from the surveys that a lot of people are not comfortable having it until there's more data around it, or they just don't want to have it all together. So just prepare yourselves for these types of discussions, and there's another story we'll cover in just a second. Now, in terms of mobility, some of these European countries have now well and truly surpassed. Italy's doing double in terms of the mobility and getting around. They were one of the worst hit, I guess, first, but certainly people were driving, walking, getting back out there compared to that lockdown period in a lot of countries. This recovery has plateaued, look, more V-shaped in some countries than others, but I want to talk about these numbers from the emerging markets in particular. So this is a story about Latin America and how they'll see possibly the worst contraction of all the different economies out there. And it's the currency that takes the hit. So you guys know the story. It's these countries that say, well, America, Europe, Australia, they're printing money to try and solve the problem, and they just don't get it. And Turkey's having the second currency crisis in 2 years. And a lot of these European banks were heavily invested, these attractive high yield bonds. And once again, it looks like they're going to get paid pennies on the dollar. Will these banks be the ones that need to get bailed out? The ECB will have to step in. The cookie crumbles again. And that's why we see these countries that a lot of people would have no idea, that Nigeria, Vietnam, South Africa, Turkey, all these different countries that we just kind of forget about because they're not in the news and not on Twitter making big headlines. These are the places that we're seeing, big uptick in crypto adoption. Now, at the other end of the spectrum, we've obviously got all these central bank digital currencies, rumors that China are very, very close to rolling this out. That's letting America get the FOMO. So the Fed are conducting e-money tests. We've already got these rumors about partnering up with Coinbase and ex-employees and being able to give those digital payments directly to people. Now, in terms of those individuals that need these payments, we're starting to see these people defaulting. So whether or not it's listing numbers in Toronto and Canada, I think this is a bit of a preview of what we're going to see in Australia. Really big delinquency rates in New York and Miami, where we have the higher priced real estate. And for the first week in a long time, we actually had the total number of those claims tick down under 30 million and new claims under 1 million. So look, this is still a high number. Maybe things are turning around a little bit. Maybe it's just the way they're counted. Look, one stat certainly doesn't make a trend. But what we have seen starting to become a trend is this increase in consumer price inflation month over month, the cost of food and other goods. Now, this is at a time when I've spoken about farms going bust. These food banks, look, some of these photos are just incredible of people waiting hours and hours to get food when we're having so much food go to waste as well. So look, I hope this doesn't get to a breaking point, but we're hearing stories, unfortunately, of a lot of people that have gone without food, or children that are going hungry regularly. And unfortunately, just printing money and throwing it at the problem doesn't help. US bankruptcies are near 10-year highs. Unfortunately, it's these banks that have tightened their lending standards. They don't want to take those risks. Look, why would they when they can get a better yield from things that they know the Fed is going to buy? So a controversial news article here, Donald Trump blocking the next round of pandemic funding because he wants to prevent these postal votes. He thinks that is not going to go in his favor. Look, not something that I know a lot about, to be honest. If we've got the US followers that want to give us their thoughts and rundown, I know it's another polarizing topic. Now, he's talking to Steve Mnuchin about getting ready to send $3,400 for families of 4. And they want to do this directly. So this is the digital currency that we keep talking about. Maybe they're going to surprise us all. But as Dan Held says here, it's just money printer go brr. I don't think there's an end in sight. I think they're going to have to do this week after week, quarter after quarter. And we're really talking trillions and trillions of dollars. And that is why the dollar, the US dollar, has not only been losing its purchasing power. So I love this chart. This is the consumer, the purchasing power of a dollar. And how many people out there do you think realize that in the past 10 years, they've effectively lost 25% of their purchasing power, even if their wage was the same? And that's that silent stealth tax of inflation. Now we see a continued record number of short positions on the dollar. It's already had a fairly big slide, so people are still betting that he's going to break down from that large longer term pattern. Others thinking that the dollar is going to bounce. But either way, this week, the Treasury auction, wasn't popular. There wasn't a lot of demand. And when there's not a lot of buyers, that's when the yields go up. So that inverse relationship with bonds, and investors were a little bit spooked from this 30-year bond auction in America this week. And once you can get higher yields, then that starts to affect the relationship with gold and stocks and everything else. We'll put those pieces together, but it's the Fed that are playing chicken here because they are not stepping in to buy yet. And this is a political thing. Trump's going to get angry if the Fed don't help him out and step in and buy these bonds to fund everything that they want to do, particularly around an election. But the Fed don't want to, because they don't want to encourage this enormous spending that's already at a record deficit. So when you look at how deep this is double normal deficits, which were already huge. So crazy stuff in terms of these staggering numbers, which are probably only going to get worse. Now, when you can get that low yield on a US government bond, you can still get this higher yield in the stock market. So that's why some people are still relatively attracted to stocks. Junk bonds, 5%. The current default rate is 5%. So that's again, it's a break-even trade. If you own a range of these, yes, you might get 5%, but if 5% of them go broke, then again, you're back to even. So this is where people are looking elsewhere, to gold. So look, number of fallen angels in the US and projections. If we do get that projection, it is going to be the most downgrades we've seen since the dot-com bubble. I really like this story here. This is about the different headlines. So we did have a story come out about how Americans are out and they're flying again, and I've had this big bump in numbers in terms of flights booked. But look, in reality, there's a lot of people that are still not flying anywhere. Boeing are cancelling these orders 6 straight months, and demand is falling for planes. I don't think anyone's in a rush to go airport and go international traveling yet. So the next thing to mention here is the corporate bond market and junk bonds, because the Fed is not funding the government, but the Fed are still jawboning and talking up about how they're happy to purchase all these junk bonds. They want to support corporate America. They want to support jobs. That's their way, they believe, of helping the labor market. On top of that, though, we know that a lot of this is just going directly to the share buyback programs. And have a look at this yellow line here. For the first time, it hasn't tracked the blue bars as closely. And the blue bars are the announced buybacks. So all of a sudden, the buybacks are creeping up. There's more and more of them happening, but they're not being very public about it. They're not, Apple aren't going out, or maybe Apple are one of the few that are. But all these different corporates, they're not really proud or saying this loudly. They don't want people to know that they're buying back these shares, even though the number of these buybacks is still increasing. So Apple are selling billions of bonds, even though they've got hundreds of billions of cash on the balance sheet. The Fed are buying this. Obviously, someone has to pay for it, whether it's through inflation or whatnot. And then obviously Apple are just buying back their shares and pushing up prices. And if more people understood this, there would be pitchforks. And I've actually heard some rumors that there's another Occupy Wall Street sort of movement that people are planning to happen so as soon as next month. So if you've heard more about that, if you're in the US or if you're planning to go, let me know about that in the comments below. And obviously, these relationships here between Apple and the US and China, it's not good. If they ban WeChat, that's really going to affect iPhone sales as well as all the parts in there. Look, this week Apple booted Fortnite. I'm not going to dive into that too much. I covered that in more detail in last night's video. But look, Google followed suit and booted Fortnite from the Play Store as well. And all this is just so bullish for decentralized gaming, Web 3.0, all the decentralized crypto blockchain stuff. I'll talk about that more in the crypto section. It was funny, though, that Fortnite put out this ad casting Apple as the evil villain, that Apple made that most famous ad of all time, some people say, back in 1984. And here they are, it's gone full circle. They are now the evil villain that decides what games or what apps get to live or die because they've got such a monopoly. Bill Gates is another one that I know is not very popular with a lot of you guys. He's been very opinionated in terms of vaccines and testing in the US, very critical of it all. And India actually followed Gates's recommendations here, and they're launching a mandatory digital health card. So this is one of those totalitarian things where you won't be able to get on the train, you might not be able to get into your apartment, your bank account won't work unless you've had the vaccine. And that is really, really scary that people are losing that freedom of choice. Okay, so here we go into the flow of funds. A lot of investors raising their cash positions, going into bonds for the safety of those, and a pretty steady decline in equities in terms of the global funds. And that's where the central banks are picking up that slack, because obviously stock markets are continuing to go higher. One of the things we see in the business cycle, the boom bust that the Fed are trying to play God over, but it's these cashed up businesses that stepping in and buying up all the smaller businesses that are going broke. So Amazon are now talking about buying out JCPenney, Sears, and using all these malls just as their fulfillment centers. So, same day delivery, packaging, logistics, all that kind of stuff. That could be the end of the old mall that you go down to, where these big tech giants are now just turning them into warehouses with drones flying things everywhere. Maybe another glimpse into the future there. Overall, IT spending and capital spending both at all-time low levels. So it's the tech giants that have the cash, where new smaller projects or ventures, they're not getting funded. So once again, it's just increasing the monopoly or oligopoly they have over the sector. Tesla getting crushed as Germany really put their foot down in the electric vehicle space. So look, these guys, I do believe, are one of the better run economies. And it's always been the concern that all the other car companies, there's no secret on how to make an electric vehicle. You just replace that motor once you've got that part of the technology sorted. So these big car companies were always going to come sooner or later, and it looks like some of them are now going reasonably well. Another chart that I thought was interesting here. So who's buying all these tech stocks and the cool hot names? And we see the average holding period for a stock was 8 years back in 1960 thereabouts. It's down well under a year now. This is where a lot of turnover happens as well in these downturns like the GFC. So that number continues to decline as day trading becomes popular. We've reached another extreme, a record in the put to call ratio. So the lower this number gets, the more calls we have. So that's people that are bullish, betting the market is going to go up. A lot of these calls are tradable, or options I should say, through the Robinhood app, which was never normally the case. So funny to think that just back in February or March, it was a record in terms of the number of puts, with everyone bearish and betting things were going to go down. Obviously the market turns. Now everyone is bullish and betting the market's going to go up. So if we have a look at just the US domicile funds, we have seen a little bit of money flow back into equities and fixed income. So this is, I guess, specific picks rather than just the ETFs, the broad passive flows, because it's pretty clear that Robinhood traders are almost responsible for the majority of this, particularly all that options trading. All this data gets on-sold to the big companies to front run, and this is still legal to do, so frowned upon, unethical, but does anyone really have any ethics in these big for-profit Wall Street corporations? Big investors are getting wary. They are continuing to sell. You see these numbers here, record high approaches in terms of the S&P 500 outflows, and an uptick in terms of those insider transactions. So that had been dropping. It's now picking up again as we near the record highs in the S&P 500, and insiders are selling their shares, using the Fed money to buy it back, or hoping that Robinhood retail traders buy it off them. George Soros has come out bashing Trump, but talking about why he's no longer participating in this market bubble. So legendary investor, the other one that really made headlines this week was Warren Buffett. And when his own Buffett indicator is reaching these levels not seen since back in 2001, that's the alarm. That's his signal. And to pay credit where credit's due, he has acted. So this is an astonishing headline, not because of what he's doing, it's because of what it represents. Donald Trump. Warren Buffett is considered by many to be, the most legendary investor of all time, and he has publicly stated that he's reducing or even dumping entirely his stake in the US banks and buying gold stocks. And that is at a time when gold is at record highs. Now, these legendary investors don't FOMO. They're not buying a parabolic chart because it's going up. They've done a lot of research, and Ray Dalio, his hedge fund, also investing $400 million into gold in Q2. That's really, really important. And it's just these ETFs, the most liquid, the most traded, the ones that are backed by gold, he's not getting too funky. That's been one of my messages that I've drilled into you guys. Once again, a triple inverse natural gas, ETN, very similar to an ETF. It's gone berserk, it's exploded. Most of you that are subscribers from a couple of years ago remember when the volatility, double inverse volatility ETF blows up. And you might even think you've got on a winning trade, but your broker says, oh, bad luck, that product blew up. We can't pay you out, sorry. And the people on the other side of it, oh, bad luck, you lost everything, sorry, you got margin called. So there's no winners when this sort of thing happens. We've seen the raw numbers about Robinhood traders that are piling into triple, double, leveraged, inverse, these funky gold and silver products where legendary investors, they're just getting exposure to the real thing. Now, if you want exposure to these, you can do it through eToro with zero fee trading. So a lot of people are still typing silver and wanting to trade the commodity, which is the future. For example, if you just want to trade the ETF, these things are zero fees, and you can buy them without leverage and hold them, and there's going to be no fees to do that there, guys. So look, that is the way to do it. You've got the SLV, the GLD, you've got the GDX. Obviously, these are the sort of things that crazy to think that Warren Buffett and the most legendary investors are comfortable to get in them at these prices. I mean, you can argue that they've had a good run, but by historical measures, which is what Warren Buffett's looking at, the gold to miners ratio, the gold to stocks ratio, all these things are still near historic lows. And that's where a lot of people get in trouble. They think, it's gone from 20 to 40. But in a bull market, we'd expect these things to run hundreds of percent. So look, if you don't understand all this, we've got the free education over on the website, still running that $100 free Bitcoin sign up bonus. So that link is down below as well. Last week, we spoke about gold and silver being possibly a little bit overvalued. They've run a little bit too hard, too fast. And the premium between the real interest rates and the bond market and what gold was sort of worth was saying that was creeping up a little bit. So it has pulled back, quite a significant pullback at the start of the week. But look, Warren Buffett used that dip as an opportunity to buy more. So yes, that reversal in real interest rates as those bond yields ticked up, which we spoke about before, it hit everything a little bit this week, all markets. Funny how these articles sort of pop up. Gold suffers its worst day in 7 years. Silver, biggest crash since Lehman Brothers bankruptcy. These things are up so much. Silver's up 100% or more in a couple of months. And yet all the headlines sort of creep out about, biggest crash ever when it has the first little pullback. We start to see a lot of these hothead articles come out. So look, I'm not saying Stockheed is a bad website or anything like that, but just I really want to get that message. It's the same in crypto where people go, should I buy some gold and get some physical bullion? That's the thing that you should do to start off with and keep learning and following the process. Whereas so many people will end up trying to pick penny stocks, funky altcoins, leverage products. And that's when they get wrecked, where if they had have just done the basics well and been patient over time, they would obviously outperform. So all those resources are free. They're over on our website. They're all linked down below. Take advantage of that. Marek Atusa, who we have on the channel, he's got free resources. He's got his premium report if you actually want individual stock picks, and some of the silver plays that he's had have been on a tear lately. So there's a link at a discount for his premium research as well down below. But as long as these central bank balance sheets continue to creep up, look, there's some forecasts now that they're going to be at 28 trillion by the end of next year. So if all else even remains equal, I think the gold is going to keep powering higher. I think the $2,500 is very much on the cards. Think about how silver is going to continue to outperform in that scenario. And I want to leave you with this paper here from the Fed, and this was their findings, and this is the blame game, whether it's Friedberg in Australia and Philip Lowe, whether it's Donald Trump and Jerome Powell over in the US, but this is the blame game. We find that the secular rise of firms and their market power, both in product and labor markets, is an important driver behind these secular trends experienced in the US economy in the last 4 decades. So the decrease in labor share and the capital share, increase in profit share, and increase in income inequality, increase in credit to GDP ratio, and the associated rise in financial instability, summarized by the probability of a financial crisis event. So what they're saying is that they really are finding that these firms, these are the ones that are really to blame. They've been an important driver in all these things that are happening. So the blame game, corporate America versus the Fed, the privatization of money. But when you just look at this chart here, central banks have come out and basically promised that rates aren't going higher anytime soon. So when we have a look at the amount of negative yielding debt or these charts with interest rates inverted, it's almost telling you that they're putting a flaw in the price of gold and Bitcoin if this correlation continues to hold true like it has recently. Alrighty guys, let's get into the crypto news. So we have seen these crypto ads, and I'm sure you guys have probably just watched one then, failing to protect people from all these crypto scams. So if you can't use the Brave browser, just skip through these ads. There's nothing we can do, unfortunately. Look, I believe if you watch the video in an incognito browser, that might not have those cookies and might not put crypto ads down your throat if you haven't got crypto videos that you've been watching as well. So maybe another tip there. We have actually seen a class action get launched. So I videoed these, I interviewed these guys a little while back, and it looks like it's going ahead. The Facebook class action for banning all the crypto ads while Facebook were planning on launching their own coin. Another little interesting bit of news, I didn't realize that NRL are using blockchain to try and stamp out fake products and intellectual IP in Australia. So, wow, NRL getting on board and using blockchain. VeChain have continued their partnership with Shanghai Gas, traceability there. Good news for VeChain holders. Zilliqa has had some new tokenomics, and this is the thing that really boosted all those DeFi projects and ETH projects, remember? So look, I think this is one of the reasons Zilliqa's been doing well, and if those tokenomics are really positive, people have to lock up tokens, they get rewarded. That is what the market is demanding more of at the moment. Cardano, their Yori wallet is out. I've been told it's pretty easy to use for staking now. So I did want to share this. If you're in our group, Damien has been kind enough to create a bit of a pool. Look, this isn't officially part of Nuggets News or whatever. Damien's been a good contributor. I'm continuing to talk to him at the moment about how this all works. But look, I believe as long as your funds are safe, your private key is on your hardware device, you're just delegating your stake to someone else. So there's not a lot that can go wrong there. So yeah, read that post there if you're in the pool, in the group, guys, and want to join the Cardano pool. Another bit of news was day trader Dave Portney, really getting behind crypto this week. So the Winklevoss twins came over, but surprisingly, he bought a big chunk, 50 grand out of $250,000 of Link. And so one of my predictions was that he would get into the crypto space, he would get behind altcoins, and he would bring his millions of followers, the Robinhood traders. And it looks like Link is the first place that he's placed his bets. And Link has absolutely pumped this weekend. So I only tweeted this, 48 hours ago, and Link, it might have been a little bit more recently, but anyway, Link's up towards $20 this weekend. It was only $10 a few days ago, a week or so ago. That is absolutely nuts. So one that I missed, but well done to all the guys in the group that caught this. So I know some of you were into it from day one, and that's now done 100x as well. So look, well done to the Link Marines if you've held all the way through there. Always great to get 100x. Sentiment have been putting out their continued trend data. Band, Link, and all these other Oracle projects or DeFi projects have been really trending. So guys, if you still haven't checked out Sentiment, I recommend it. They show you the social trends of what people are talking about, what's emerging on Twitter. this is where we've really picked up a lot of edge, and along with our other analysis, it's just another piece of the puzzle that helps you confirm that you're early or right. IOTA revving their engines before the mainnet upgrade. So IOTA is one that we've been talking about. I think it was 12 cents or 15 cents when we said it was going to play catch up, and it's now at 40 cents or more. Well done to all those guys. Remember when people thought IOTA was dead because they had to freeze the network, and my message was, IOTA is more centralized, but there's no hiding that. That's just the way it is, and I don't think it's going to stop them from succeeding. The other big news that we saw this week in terms of KYC was BitMEX letting their users know that everyone's going to have to verify by February 2021 starting next month. Now, VCs have been heavily funding decentralized derivative platforms. I've spoken about most of these on the channel, but during the week we saw a huge raise for Serum, which we'll get to just a little bit later. I think that one of the fundraising or one of the launches that was really controversial and bad this week was Curve. So the Curve team sort of said, well, someone else deployed the contract. It wasn't us. And all of a sudden we've got Binance announcing that they're listing this as well. Look, something's really fishy. That doesn't add up. And it's disappointing because I really like Curve and what they're doing, the concept. So we'll see what happens when the dust settles and the fallout, if we get the truth from what actually happened. Because I don't believe that you just let someone else launch your own token. Now, the Yam controversy was another explosion of the DeFi space that launched this week. So it was shielded by a lot of YouTubers, but also a lot of hardcore Ethereum community members, and that disappointed some of the OGs. Even Arthur Hayes of BitMEX came out and tweeted that he's buying yams, and that's obviously one of the reasons that it absolutely pumped. But I think it was an important experiment. I did a bit more of a write-up on this for members, the different concepts that it was combining. Now, obviously, it failed miserably, and the team were pretty transparent that they hadn't done an audit, but they already got funding from Gitcoin to do a proper audit, relaunch the protocol, and migrate all the old tokens over to the audited contract. So it looks like there's actually going to be no damage. So this wasn't a scam like some people were saying. It wasn't even really a failure. It was just a speed bump because they were going too fast. And I think there's a lot of that happening in this space. I tweeted this meme out that DeFi is just such a hectic, fast-paced space that things can be out of date within a day and the next hot coin is out there. And compared to the bond market or any other space, it can be exhausting, guys. So look, if you're new, I wouldn't even worry about FOMOing in. Just stick to learning about the basics about Bitcoin and the large cap projects. There's no need to get funky, particularly while there's so many bugs and risks in that space. Nexus Mutual are insuring a lot of these projects, and that's had another absolute bumper week as more and more people are starting to look. I've said this exact thing so many times over recent months. Wake up to the risks of depositing a large amount of money, being able to insure that. That's why Nexus Mutual was my top pick at the start of the year, and it's done 1,000%. Now, with all these DeFi, protocols blowing up and the number of users, gas went through the roof. $10, $20, $30 to send a transaction. Dharma have got free gas at the moment. They're paying that for you on the mobile app. And 1inch Dex have also got their Chi token where you can buy gas whenever the price comes down, buy their Chi token. Aave have launched version 2, Seamless Finance. That is good news for all of you that are loving your loans and the lending space there. MyEther Wallet has also integrated Aave and Ren. So this is one of the most user-friendly wallets, integrating DeFi, making it easier and easier for more people to use these lending protocols. Ren has been on fire this week in terms of the number of wrapped Bitcoin that are moving over to the Ethereum protocol as well. Lend has been one of the best performers this week. I guess I just want to say congrats to Synthetics. It was only a week or two ago when we said congrats on doing 100x, and the team's already gone 150x since we first covered it there. So people that invested $1,000 when we covered it at EDCON, saying that it was one of my top 2 projects, are sitting on $165,000. So I'd suggest to take some profits if you haven't already there, guys. Another project I'm really bullish on is Decentraland, and the metaverse got some coverage in Forbes this week. Apparently Binance are now building a digital exchange in Decentraland, which is really cool. And we are going to have a Nuggets news base in Decentraland for some member meetups as well, which is awesome. Check out that interview if you haven't already. This one's still not that far above ICO price. So look, do your research there and check it out. But one that I'm very, very excited about. Particularly with that narrative we covered before with, the App Store booting these games. This is the perfect storm for decentralized, unstoppable gaming. Someone shared this with me as well. Are we early in the DeFi space or is it a bubble? Well, I think the good projects have still got a long way to grow. When you look at something like, let's take Chainlink, for example. It's been on a tear, but it's still only half the market cap of XRP. And remember, in the bull market, XRP was 10 times higher again. So, look, people are now saying Chainlink $100. Look, if it gets there quickly, I'd probably argue that we are in a massive bubble. But compared to where things have been in the past and how crazy things have got, and when I do think that things are going to get more crazy this time around, these valuations are possible, but I don't think they're fair value. Okay, I think we are going to go into a bubble and things are going to be overvalued, so it's important to take profits. And people like Shamartha saying, I don't even know what DeFi is. How many of your friends or family know what DeFi is? All the big projects are now pivoting to DeFi. Ripple are now talking about being the Amazon of payments. And it's funny how people are sort of starting to, name drop, things that we've never heard before in white papers or dozens of interviews. EOS announced they're getting into DeFi this week. Projects are shifting between different chains. Polkadot and Cosmos are really trying to crack into the world of DeFi. Litecoin have launched their first Visa debit card as well. Enigma have announced that they're doing this secret DeFi tokens and programmable privacy for DeFi. So everyone is really jumping on board this narrative. Wazir X, this is an exchange that I'm actually pretty bullish on. I want to have the founder on the channel again. I think this is one, particularly now they're pivoting to DeFi. Think about the potential in India for the unbanked with that DeFi. We also got news that Thailand's central bank are eyeing off DeFi. So no one wants to be first, then no one wants to be last. One of the big pieces of news we got about Bitcoin was the MicroStrategy company buying $250 million worth of Bitcoin. And I said that that's going to start the floodgates for companies. One of my predictions has been that a central bank that's got nothing to lose, it'll probably be a Southeast Asian country, they will be the first to start to buy Bitcoin or get involved and adopt Ethereum, DeFi, and stablecoins. And once again, it looks like these predictions continue to come true. 4 of the top 5 Korean banks are already dealing and doing the crypto services. We've seen all the US banks have custody. So, guys, I'm tying this all together and nearly finished, but this is absolutely incredibly bullish, everything I'm saying. All right, so Coinbase got a little bit upset here with Binance US being able to join a US lobbying group, and they actually left. So there's some clear competition there between who's going to be the winner-takes-all crypto exchange, neo-crypto bank of the world. I have mentioned that gas prices have got really high. Some of the more promising scaling projects I have covered on the channel, particularly in last night's video, but I wanted to mention this. So part of the interview I did with Real Vision for the Ethereum documentary that we're putting the final finishing touches on, Vitalik and I got chatting in it. 20 minutes turned into an hour and a half, and I think Real Vision are going to upload that as a standalone interview for their members. My members will get access to that as well, and then I believe it might be public for everyone in a few weeks or maybe a couple of months after that. But one of the things I want to share with you that Vitalik said was he believes that Tether might migrate over to Amisa Go. Now, I'm not sure if he meant just on some exchanges, like how Bitfinex are doing this, or if he actually dropped a bit of a hint that all the exchanges are going to get on and use the Amisa Go network. And that would really free up the Ethereum chain if all those stable coins are now on Amisa Go using Plasma. Another one I've been super bullish on and spoken about publicly was Raiden. They proved that they can do 100,000 transactions a second or more in the Reddit scaling bake-off this week, and that's now up 1,000% since I shared it with you guys. So look, I hope you've made some profits there as well. A lot of these other layer 1 protocols that are helping, or I guess their use case that they're proposing now is taking some of that load off the Ethereum chain. So Near Protocol, Solana, which FTX are building their Serum protocol on, Flow blockchain. Some of these have been really strong performers lately as well, and it's no surprise that that's the use case. Solve the problem that is happening in the real world to give yourself value. After FTX launched at 20 times the ICO price, the Near token sale was meant to happen in the next 24 hours, and it was so popular the website crashed. So head over to their website and their Twitter. They are going to be redoing that in a more fair fashion and making sure that some of you guys that wanted tokens do get some. But be careful of scams as well. So this was the FTX Serum token sale. That absolutely boomed. For those of you that listened to our interview and did your own research and got an allocation there, I think the ICO price was 11 cents or 8 cents for early investors, and it's now trading at $2. So 20x there. Well done to the guys. Obviously good tokenomics with a lot of tokens being locked up. And they're currently doing this giveaway, or they already did. So please check if you won $2 million or if you're one of the hundreds of people that they've given some tokens away to. And for our members, I'm going to be giving you guys all, I think around $100 of Serum, depending on how many enter. But nice of FTX to do a bit of an airdrop there after good results. So look, maybe they were only going to give us $5 and now it's done at 20x. They're happy to give us $100. But look, if you join the group, search for Serum or FTX or giveaway, or just click on the nugget tag and you'll see this post I put up about the Serum giveaway. Final piece of Ethereum news I wanted to mention was Alchemy. So after 2 years, they've launched this developer platform to really onboard millions of users in 197 countries, get people into DeFi. This is backed by Jay-Z, Charles Schwab, really opening up the public for all the developers to start building on Ethereum, which is just awesome to see. One thing I wanted to mention here was EDCON. So that did go ahead after initially being cancelled. I've watched a few of these interviews. I'll make some notes on it all, but a few more of these panels to watch. This is where we did find hidden gems a few years ago. So I'm really excited to see if we can find another hidden gem in amongst those panels. And if anyone else in the group wants to do a summary for us, that would be awesome as well. So this is getting to the story I want to share. So well done to Cameron. This is the post he put up if you want to pause, really detailed. This is what we encourage in the group. Put in a little bit of effort. You'll get in, you'll get out of it what you put into it. And everyone's starting to help each other and put up posts like this. This project launched at 10 cents at IEO on the 16th of July. And here we are literally a month later, less than a month, and it's done 7,000%, 70x return. Turning $1,000 into $70,000. Like, that is amazing. These are the stories I love to hear, particularly because of what's happening at the moment where people are at home. You can either choose to sit at home on the couch and binge watch Netflix or whatever, or you can make yourself more valuable, get educated, your second source of income. And that's really why I love this story and wanted to share it with you guys. A couple of stories about Bitcoin mining. So this is another example of picking up that energy slack that goes to waste in America. A lot of these natural gas mines that are just sort of flaring off the gas, and how crypto mining, facilities are getting involved and almost looking to help in some ways and make them more green, or just at least more efficient in terms of the energy that they're using each day and not going to waste. But the proof of stake transition that Ethereum's doing is one of the green energy arguments. We've seen a lot of ESG style investing. So there's a few reasons that the tension has heated up between the Ethereum and Bitcoin community, particularly now it's going proof of work versus proof of stake. But this whole Ethereum no one knows the supply, you can't count it. This was absolute rubbish that got blown out of proportion. So read this thread by Andreas Antonopoulos if you haven't already. It outlines why it's difficult, but why it's very doable, and how I guess it just really snowballed out of proportion from Bitcoin maximalists. Here's the number of Bitcoin, and it's gone parabolic in terms of how many are coming over to Ethereum. Again, maybe another reason why maximalists are getting upset, but I think it's a great thing, all this interoperability and chains working together. In terms of straight out investment demand though, we've got Grayscale, MicroStrategy alone, and these Bitcoins that have been mined. It's clearly not meeting this enormous demand from the last 2 weeks. And that's what we were hoping would happen with the halving as Bitcoin becomes more scarce. So a huge ad in the Financial Times from Mike Novogratz's dad, Galaxy Digital, telling people to buy Bitcoin. We've got former Prudential Securities chief executive. He's telling people to get into Bitcoin. It's a long-term safe haven and short-term speculative asset. New York financial regulator gave the green light to 10 crypto tokens for custody after we had all the banks getting that regulatory approval. So this is my thesis that you've heard me say it 100 times. Money will flow into those large cap projects. Grayscale have released a deck for financial advisors. A lot of them still don't know how to advise their clients on digital currencies. We've got day trader Dave now tweeting that Bitcoin's going to $12,000, and it did. So look, I'm eagerly awaiting him telling his followers it's going to go to 20,000 and watching them all pile in. But look, all these different crypto assets, there's still money flowing into DeFi well and truly. I mentioned before, the revenue that they're now producing. So you can start to make arguments about PE ratios and more traditional models. And that's what Token Terminal and other different models are trying to do, so that these traditional investors and advisors can start to at least get their head around where value is coming from. That was something I spoke about in this interview with Dave Bolton during the week. So Flipside Crypto is a data analytics firm. He calls it chain walking, all the research that they do to pick up those trends. And Coinmetrics have come out with more of these transparency reports about free float supply. So we're just getting so much more data about how to value these coins. That's going to lead to a lot of investment from the traditional space. Numeraire is another one of Matt's favorites that's doing this Bloomberg terminal style data for all the crypto assets as well. That got listed by Coinbase during the week. And look, Matt originally covered this one back here, I think at $3, and it hit $65 during the week. So well done, Matt. Another big winner that's been covered in our research reports. Okay, so let's talk about price action. This was a trade that we were very bullish on, the Ethereum Bitcoin ratio, when we were having the, stars align in terms of fundamentals, technicals, and this sentiment about ETH being dead and not being able to scale. ICO boom was a one-off. ETH's not money. Tokens accrue all the value. ETH won't, and it's really outperformed in the past few months. We knew that was going to lead to good performance in US dollar terms as well. When I tweeted this thread, I've been updating it fairly regularly, and here we are at $450. So that's been a tremendous run if you've got in anywhere here. But I'm actually starting to lean a little bit towards the fact that I think gold is led the way for Bitcoin to really start to outperform again. So this is the chart that I just showed before about that relationship, but now gold's at all-time highs. I think there's a big scope for this pattern to play out. So look, whether it's a cup and handle, whether it's investors just saying we've broken that downtrend, we've got the high here. If we close above this on the weekly, there's very, very little in terms of resistance left. And I think we can go to $14,000 very, very quickly. And this is the overlay that I shared of gold on top of Bitcoin. This is a path that I would love it to follow. Now, we've got the first leg of that. Since I tweeted this, Bitcoin is now at $12,000. But that puts us at, new all-time highs by the end of the year. If things get going, it's very, very doable. You guys know that we ran that $10,000 from 10 to 20 in a month last time in December 2017. So look, when people are all watching this tightening pattern and a lot of people were bearish and everyone wants one more pullback and everyone wants it to be easy to get in, that's when I was leaning towards these blue and green scenarios that I was talking about as well. Here we are. I'll take this clutter off the screen and just show you the pattern alone. And this gives you a really clear indication of what is happening. It's just a beautiful chart. This turned into a little bit of a bull flag. It didn't give people that chance to buy in. We know that there's a lot of good investors I know that don't have as much exposure that they would have otherwise liked because they're playing it too safe with all this uncertainty around the stock market as well. So it's my opinion that you're always better off to have a train ticket, to be on the train. Do not wait and be late. So you can be sensible, dollar cost average in, dollar cost average out, and buy. Take your profits and redeploy those into things that are a better risk to reward. I think that is, at the end of the day, the style of investing that you really want to pursue there. But if nothing bad happens in terms of the stock market, I think that we can easily keep going higher. The only thing that's worrying me a little bit is if we do have that correction. I think that's when the Fed would ramp up their printing and buying. Maybe Trump throws his $1 trillion he's got in that US Treasury. Let's wait and see there. But it's been a tremendous run across all these assets. Alts have been pumping. Bitcoin, I do think that could be that safe haven. So in terms of Bitcoin dominance, maybe money does seek a little bit of safe haven protection there if we do roll over. But look, what a time to be alive, guys. So that's it. If you do not want to hear that little story I've got for you for those that have stayed to the end. Otherwise, guys, head over to the website and I'll talk to you again soon. So look, sharing that story, I want to share a few words that I spoke about at my pa's funeral. So look, he had a big influence on me. We spoke a lot about the olden days. Unfortunately, I never got to have him on like I had hoped to share his wisdom with you guys. But one of his favorite sayings that was the number one saying that stuck with me was he was a tennis player and he was still beating a lot of younger guys when he was 60 and 70. But he used to say, tennis is a game of skill and restraint and hitting the ball where the other guy ain't. Now, we all know we love a good dad joke and some rhymes, but that didn't mean a lot to me when I was a young kid or a cheeky teenager trying to hit the ball as hard as I could and hit winners past him when I was playing him. But I think it took on more meaning and significance as I got older, and it was one of those things where the more you think about it, the more meaning it can have in real life. You don't have to be the fastest. You don't have to be the best job, the biggest car, the biggest house, the fastest car, all those material possessions. Take your time. Think about what's really important. The people that stop and think about how they're going to go about it, whether it's their job, their relationship, their friends, their business, life in general, stop and think about what you're doing. And that can be the key to success rather than just going a million miles an hour and never stopping to think about it. So look, it is all about skill and restraint in life, and maybe not always necessarily doing what everyone else is doing as well, that contrarian that we talk about so often on the channel in different aspects of everything we're doing. So guys, that is everything I wanted to share with you today. Head over to the website if you want to join our community, nuggetsnews.com.au. Tell your friends and family to get educated. There's a lot of scams popping back up. We've got all the free education if they don't want to join our group. But otherwise, smash that like button, share these videos around. I will talk to you again soon. Cheers.